Well, we also heard from CoreWeave. That's the stock is moving lower right now in overtime following results just moments ago. The company posted a loss. We're not comparing that to estimates, but revenue was better than expected. The CEO saying it's scaling rapidly to meet, quote, unprecedented AI demand. So let's bring in Nick Del Deo of MoffettNathanson. Nick, it's great to have you on. Cash flow came in better than expected, too, because they didn't spend as much as they set out to on CapEx either. Why is the stock falling?
Yeah, first of all, thanks for having me, Morgan. I think, if there's a number that stands out in the earnings report that might have been a little shy of expectations, it's probably the remaining performance obligations or their backlog, which, it's a function of how much new revenue they book in the quarter, less what they reflect in the P&L. So to the extent that folks thought that there would be substantial new bookings in the quarter, that's probably what is driving the movement in the stock.
How closely are you watching this timing between large bookings and build-outs of data centers? How much does that matter to the future for CoreWeave here?
Oh, it's critical. People typically think about CoreWeave in the context of chip supply, but I would argue that data center supply is just as critical because you can't bring GPUs online without data center capacity. So, one of the metrics that we look at closely is their committed data center capacity, which I believe was 2.2 gigawatts as of the end of Q2 versus, I think, in the range of 500 megawatts active. So all else equal, that would point to roughly a 5x increase in the business's capacity over the coming years. Obviously, to the extent they're gated by the cadence at which they can bring that capacity online and match it up with the GPUs that they can procure and put into those facilities.
Is the suggestion here, Nick, that it is a procurement issue, perhaps? I mean, AWS was capacity constrained famously in the most recent quarter. Why would CoreWeave's pipeline come up short?
Well, in terms of new bookings, look, deals are lumpy. It could be that simple. We'll see what the company has to say on their earnings call at the top of the hour. It could be a capacity constraint issue in the near term. Any one of those factors could be responsible.
So what should investors listen for in particular? What would be the better news as to the cause of that bookings issue?
Yeah, well, look, I suspect that the company will address it on the call directly, so we'll hear from that. We'll hear if they've had any large bookings after quarter end. But, again, if a booking came in, say, on July 1st as opposed to June 30th, that could push it from Q2 to Q3. I think thinking about 2025 guidance would also be important. It seems like the company may have brought some capacity, some GPU capacity online ahead of expectation to drive the revenue beat. So the degree to which that rolls into guidance will also be something to watch out for.
I mean, this is a company that critics have said does not have a lot of diversification in terms of the revenue stream and future revenue stream, at least through the end of the decade. So what does Core Scientific and the acquisition of that company bring to the table? Yeah,
so as we talked about a moment ago, CoreWeave's growth is in a way constrained by the amount of data center capacity it can bring online. And as you guys know, power supplies are a real issue for the data center space today. So what CoreWeave has done is kind of broadened its aperture and looked to do deals with former Bitcoin miners like Core Scientific, like Applied Digital, like Galaxy Digital, as an alternate way to bring capacity online. They struck deals for worth about $10 billion for 600 megawatts of capacity with Core Scientific. Essentially, by buying Core Scientific, what that does is it allows CoreWeave to make those rent payments go away. It helps it to arguably bring some of that capacity online sooner and take control of capacity that Core Scientific may have otherwise wanted to lease to other players. In essence, I think the company is issuing richly valued equity to bring on hard assets.
Nick, to what degree should investors be concerned about risk leverage to risk here? I mean, the AI trade has been hot and maybe even frothy at times. And you just mentioned crypto being a piece of this. We were just talking about some of the wild stuff happening in Ether right now. Is there a chance that some kind of disruption in one of these areas could bleed over into another?
Oh, sure. You mean between crypto and CoreWeave's business? I wouldn't say that's likely. Again, I think that the folks that CoreWeave is dealing with are primarily former Bitcoin miners that are trying to repurpose their power capacity to serve high-performance computing needs. I'd say in a broader sense, to the extent that you view the AI theme as frothy, I mean, CoreWeave is kind of ground zero for that trade. It's harder to find a pure expression of AI infrastructure in the market. I would say, in CoreWeave's defense, I think they do have multi-year contracts with their key customers, which will help to insulate their financials from near-term swings. They're much less reliant on leasing out capacity on a spot basis. It tends to be contracted over a longer time, and that certainly helps to mitigate some of the risk.